All right. Hi, my name's Shay Coker, Managing Director at Savills in Miami. Today, my guest is from the land down under, Michael Fenton, who is the National Head of Industrial and Logistics for Savills Australia and New Zealand. Welcome, Michael. Good to see you.
You too, Shay. Good to see you again.
So last time I saw you was here in Miami about 8 months ago. So
Yeah,
a lot has changed since then.
yeah. A distant memory.
Yeah.
Oh, to get on a plane again.
Yeah, exactly. So I didn't ask you while you were here, how did you get involved in industrial real estate?
Oh, wow. I started in industrial real estate about 28, 29 years ago. I kind of fell into property. I actually studied property economics at university, then went on to do a Master of Commerce majoring in property, but actually started my career at Savills, or one of its former incarnations that they bought out Radenhorn Commercial. And stayed there for about 8 years or so, doing industrial leasing. I started actually doing database entry, where I think most people would probably start their careers in agency, learning about the systems and the major players and the various markets. And then I moved on to work for a real estate investment trust for a few years, and then transitioned back, worked for a couple of agencies, and then landed back at Savills about 18 months ago. So I've come the full circle.
Awesome. And so how long have you been doing this?
Yeah, well, I've been doing industrial for 28 years, but I sort of really found my focus on doing industrial investments after I did a stint at a real estate investment trust called Dexus here in Australia, and that's where my passion was, I think, and found a real niche in the market, specialising in institutional grade investment sales. So I've probably been doing that since the mid 2000s as a core focus. But in my role, running this industrial business in Australia, we're across all facets of our teams of over 40 people looking after leasing, sales. We also have supply chain consultancy, corporate finance and the like. So yeah, we're a full suite of services down here.
Awesome. And by your title, it looks like you cover New Zealand as well.
Yeah, we have a lot to do with our brothers across the ditch, who have been doing it a lot harder than we have during this pandemic. They went into stage 4 lockdown, so they were unfortunately locked up in their homes and couldn't go out. So nothing really happened over there in the last month, and they've just come out of that in recent days.
Wow. So before we get into that, into the lockdown talk, what kind of trends were going on in industrial and logistics in Australia before the virus came around?
Yeah, well, industrial logistics, like I think as a global theme, was the focus of all major investors. It was the sector people wanted to be in and still want to be in. We had an unprecedented amount of capital looking for logistics assets here in Australia, and that, as I said, that theme was consistent globally. Probably the major players that we have down here in our market that you'd be familiar with in your part of the world, groups like Goodman, Blackstone, and Cabot are actually just setting up a presence here in Australia now. So it's certainly got our market, albeit relatively small, certainly has a lot of focus on it from global investors. We're a very transparent market. Both in terms of our legal and financial system. It's a very liquid market. It's probably just the one major hurdle is getting scale and getting that quickly. We certainly are seeing a lot of interest in our market.
Right. And what kind of tenants are occupied or do occupy most of these things?
I suppose the major industry subsector from an occupier perspective is third-party logistics, transport and warehousing. We predominantly manufacture a lot of product overseas, although after this pandemic. It'll be interesting to see if that theme changes. But we import a lot of the products that we consume in terms of finished goods, and so third party warehousing, logistics, servicing the retail and wholesale trades is the predominant sector in our market.
I imagine you get most of your, or many of your products from Asia, like we do in the U.S. In the U.S., they tend to come into the LA area for the most part. Where do they go in Australia?
In Australia, it's on our east coast. The major capital cities, Sydney, Melbourne, and Brisbane, all have major seaports. So they come into those three ports mainly, and then get distributed out from there. And a very small percentage of that is air cargo as well. That mainly comes in through Sydney and Melbourne. But we have fairly large ports, in our major capital cities.
And so what everybody wants to know here in the U.S., at least, is we don't hear anything about Australia, what the situation's like. What's going on there nowadays? Do you have a lockdown? Are things opening back up? Where are you?
Well, you probably don't hear a lot about us over there because, in relative terms, we haven't been affected anywhere near the magnitude of some of the countries in the Northern Hemisphere. We did have a very strong government response at the early signs of the pandemic breaking out. We went into lockdown in terms of closing our borders, international borders, in mid-March, and I think that was that early response has helped us contain the virus. Again, as I say, relatively, it's not, things aren't normal here by any stretch of the imagination, but we've recorded less than 7,000 cases and had less than 100 deaths.
Wow.
And in the next couple of days, we're going to enter a new phase of easing restrictions and lockdown. But so in Australia, we didn't go into full lockdown. We obviously, workplaces closed, a lot of retail centres closed. You couldn't have gatherings in public places. But what the government did do was, allowed people to go out to exercise, provided normal social distancing rules applied. So that's about, I think, 1.5 metres, or the size of an adult kangaroo between people, as a reference point for you.
Good reference.
I'm just trying to contextualise it. And then, as of this Friday, we're allowed large gatherings of 10 people or more in public. Some cafes and restaurants are opening up with limited capacity, but the signs are we are moving out of this. But obviously the impact has been fairly wide-reaching on business here. Our economy has taken a massive hit. Our stock exchange in the early stages of this plunged almost 10% in a day, which was the worst fall since the global financial crisis. We have been certainly impacted, but the government has responded not only in terms of dealing with the physical aspect of the pandemic, but also from a financial package. We had $130 billion as a stimulus package offered by the government to help protect and save jobs. And that package actually runs out in September, along with some other financial stimulus packages they introduced. So while we haven't really seen the major impact of the coronavirus on the property market here, or the broader economy, I think that pain is looming fairly large on the horizon, particularly once these financial stimulus packages run out in September. And I think that's when we will see a bit of distress in the market.
What were the vacancy rates like in your logistics markets before the virus came around?
It's an interesting question, because we actually did a lot of analysis on that, comparing where we're sitting now with vacancy rates to what they were looking like sort of last year when things were chugging along nicely. It's interesting. The vacancy rates actually increased slightly in most of our markets, which surprised us when we were doing the analysis, because there was, I suppose, an assumption. We had a lot of short-term leasing activity occur during the main phase of the pandemic here. A lot of logistics companies associated with servicing the retail sector and healthcare and medical were taking up a lot of space on a short-term basis. As panic buying was fairly rife here for a while. You may have seen toilet paper was in fairly short supply for a while. That's no longer the case. But the short-term impact was a bit of a spike in leasing activity. But what we found surprising was that actually we saw vacancy rates still increase slightly. And that was, I think, a theme resulting from a softening in our economy leading up to the pandemic. So we started to see signs that the market was slowing here, coming into the sort of second half of last year. Business confidence was starting to wane a little bit, as was consumer confidence. And we've got all-time low interest rates here now of only 25 basis points for the base rate, which was again the government trying to get the economy kick-started with spending.
And so in terms of numbers, overall vacancy rates, where do they hover today?
We're sort of sitting about, in most of our major markets, 5%, but in some sub-markets it's as much as 10 or 12. But we expect that to increase fairly significantly in coming weeks, particularly in the secondary space. We have a two-tiered market. We're seeing core property is in high demand, whereas secondary space, I think that's where we're going to see some softening in rents and also capital rates in terms of pricing.
Gotcha. What other changes do you see going forward?
Well, I think one thing we've certainly seen is a significant uptake in online delivery, e-commerce, as people have been forced into using online retailing. And it's interesting. I suppose in the lead up, looking at online retail sales as a percentage of total retail sales in Australia was only about 10%, which compared to some other countries, certainly in Asia Pacific, I think Korea in our region's got the highest utilisation of online retailing versus traditional. They're in the 30% range. We'll probably see that trend escalate now and grow exponentially in terms of online versus traditional retail sales, which is a good thing obviously for the logistics market down here. Probably another thing we'll see is an increased investment in automation in warehousing. Again, I suppose what the coronavirus pandemic has done is put an increased focus on protecting the supply chain process all the way through, and reducing the amount of human interaction which can jeopardise production and supply and distribution. So automation, I think is one thing that we'll see companies invest a lot more heavily in.
Understood. Well, sounds great, Michael. Thanks a lot for your insight, and appreciate you coming on.
No problem, Shane. Look, as I said before we came on, it's a highlight of my career to appear on the Shane Cocker Show.
I bet. Appreciate it.
Okay, mate. Stay safe and happy yesterday.
That's right. Thank you. Enjoy tomorrow.
Cheers, mate. Thanks, mate. Bye.